This is Alan Bush with the Daily Financial Forecast for Tuesday, December 24th. Stock index futures are trading mostly higher this morning. We did have the December Richmond Federal Reserve Manufacturing Index coming in at a -10 when -8 was expected. So in the short term, it looks like the fundamentals are somewhat offsetting, with traders closely watching the Federal Reserve's policy outlook for next year, focusing on the potential for fewer interest rate cuts. However, this bearish influence is likely to be offset by prospects of a stronger than anticipated U.S. economy. In the longer term, though, it appears that the fundamentals and technicals still are overall supportive to stock index futures. Moving over to the currencies, the dollar index trading higher this morning and remains in a 4-day congestion pattern. The temporary avoidance of a government shutdown has bolstered optimism about the U.S. economy. So the fundamentals and technicals remain supportive to the dollar index. At the same time, the fundamentals and technicals are bearish for the euro currency and the British pound. So I think from here, we'll probably see the dollar continuing to advance and the euro currency and the pound continuing to come under pressure. And in the interest rate futures markets, we had December U.S. Treasury bond futures declining to the lowest levels since November of 2023. So recent declines in futures, especially at the long end of the curve, are due to the hawkish comments from Federal Reserve officials, especially at last week's FOMC meeting. Right now, there's a 91% chance that the Fed will keep its rates unchanged at the January 29th meeting, and a 9% probability of a 25 basis point cut. Also, at the following March meeting, it still appears that the Fed will keep its interest rates unchanged again. So overall, it looks like futures will probably remain a bit on the negative side as far as the fundamentals are, especially at the long end. Still appears that the U.S. economy will perform well, and I still believe that the Fed will be relatively slow to move to accommodation next year. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMAS or ADM.